risk. Sign up today.
The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon, folks. Welcome to the July 3rd, the wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hey, let's make sure we have an extraordinary one. And the easiest way to do that, well, is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We're going to go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here. But much, much more important than that, during this next 60 minutes, I'm here to serve you. So feel free to pick up that phone. You can dial on in at 877-927-6648. If you can't dial in, we've got you covered there too. Go ahead, send me an email, steve@tfnn.com. In that subject heading, please put radio show question and send it early, please. And in our Tiger's Den, well, any ping will do. So let's go ahead and get this show started on wonderful Wednesday. Of course, this is Tiger Financial News Network. Welcome to Lush Show. I'm Steve Rhodes out there. Right now, we got a mixed bag out here. The Dow just went negative, off 3 points, so it's flat. S&P is up 14 points, about 0.5% to the upside. You've got the NDX 100 up 100 points. That's 1%. Russell's off nearly 1%, as is the semiconductor. So really a mixed bag out here. We'll go take a look at any index, any ETF that you would like to. Goldilocks, maybe we'll start there since that's off $20, and silver's down 37 cents. Light sweet crude is up 57 pennies out here. Lead the charge dollar-wise, the upside, it's the gang. It's Amazon, Shopify, Tesla, Netflix, Google. Yeah, they're all trading to the upside. To the downside, IAC, Interactive Corp, off $215, 66%. That sounds like a stinger. Regeneron Pharmaceuticals off 18. Mercado Libre down 14. Match Group down 11%, or about $12 out there. So certainly things to look at. Let's begin by looking at Goldilocks. So what do you know about gold? We took a look at this fairly in a fairly detailed way yesterday out here. One of the charts we looked at, and remember one of the things that I had posed to you was this little rising trend line, little trend channel line out here. And what I said was, well, we need to see the close on Thursday. Well, it's only Wednesday. But my question, or what I was posing out to you, was, will that contain price? Right now, as of Wednesday at 1:09 in the afternoon, yes, that has deflected price. So what does that mean? Well, the other thing here is I drew in this. I just picked up the swing point from back here on November the 7th, 2011. There were two other swing points, or two other attempts to take out those highs. One was February in 2012. The other was October of 2012. Failed to do so. Another attempt took place out here back in April of 2020. So this 1800-ish area, it's marked on my screen as 1804, that's a key level of resistance as well. And then just above that, the 1829 mark. So that's what this chart here is telling us. How is gold trading in all of the major currencies? Always good to see what it looks like on everybody's trade desk out here. Right now, gold expressed in dollars back below really the consolidation level out here, and also back below the top of its daily profile, which is 1788. Gold moving lower in all of the currencies out here. So now really what we do is go take a look at the short-term charts out here for Goldilocks. And for gold, put up a hourly time frame chart. Now, the hourly time frame chart This morning was showing the Rhodes momentum indicator signal. Price moving higher, doing less relative energy, and price had already closed below 1797.30. So I shared with subscribers this morning was the price target, would likely be 1765. Did price get down there? No, but boy, it got close. Now 1765 is the next TD9 count breakout level. Price got down to 1767.90 out there. That's a beautiful thing. Now, what we can see here, and you can see the nice hammer candle that formed at that time, right, trying to hammer out a bottom. We can also see that Stevie's green line turned red. So this tells us that price and that line want to catch up to each other. The exact price point, we don't know. At this stage here, it might be in the 1787 to 1790-ish type area. And so that's what you'd want to keep an eye on. If gold turns down from there, then it's setting up an A to B equals CD to the downside or some other pattern out here. So I'd watch the 60-minute time frame chart and most certainly watch 1765 to the downside, and to the upside, probably the 1790-ish area out there. We've got a caller on the line. Let's go to Brent in Martinez, California. Brent, thanks for calling. Thanks for holding. How are you today?
I'm doing quite well, Steve. Thank you for taking the call. And how are you doing?
Sure. I'm doing well. Thanks so much for asking. Gearing up for the 4th of July holiday weekend. Although here the governor closed down the beaches again for this weekend, just for this weekend. The safest place to be is outdoors, and they're closing down the beaches.
Yeah.
Look, it won't affect me because I just walk out the door. I can be on the beach, but it's insanity. It's insanity. I'm sorry, Brent. You asked how I was doing.
Oh, no, I'm on the same page with you. I don't even know what to say anymore at this point. I'm kind of beyond. I'm just perplexed with the whole thing, but we've got better things to talk about. So.
Yes, we do. We do. And the ticker symbol here is going to be DSSI. So tell the folks what you're doing and how we can help you.
I did take a position. I'm in the higher sevens. I did see you went into something in the same area in the newsletter. I just opted to go with this one because I got some bird activity in the background and the leaf blower, so hopefully that's not too distracting. But
nope, it's all good. It's all good.
Just adds to the effect here. So I just went with this one because it was down near its lows, and it seemed like it might have finished the pattern down there. So I just wanted to get your thoughts on it.
Okay, sure, absolutely. So let's. Oh, geez, I put it on the wrong chart. Darn it, DSSI. I'm going to pull over the daily time frame chart, and then I'll have to go back to my other set of tools out here and grab the other chart. So we'll just start with the daily time frame out here. And what Brent is looking for is some kind of bottoming pattern out here. And so that bottoming pattern, so we don't have any kind of TD 9 count pattern. I don't have like wave number 7 pattern. And the question is there some way for me to squeeze in an A to B equals CD to the downside? And to do that, let me go over to my other charts out here. So let me also mention that there is a new profile that formed yesterday. So this should at least assist you with regard to, you say you're in the sevens, and the bottom of that daily profile is 778. Now, this is a bearish structured profile. So the levels you're going to be watching on any continued move higher is going to be 866 to 910. You clearly want to be able to see price take out the 910 area. So on the A to B equals CD, there's a larger one out here. Let's take a look at it. Brent, see if this possibly completed it. If I could get my system to work with me. There we go. So the A point I've got out here looks like up at January 3rd, the B point down here on April the 7th of 2020, and the C point April 27th. Yeah, so that still doesn't get, well, it's close. So Brent, the A to B equals CD pattern price projection would have been 660. Hey, we'll be right back.
All right, sounds good.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, Taz understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the Taz Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the Taz Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has just launched their July 4th Tiger Dollar sale. For 1 week only, we've doubled all the bonuses where you can now get up to a 20, 30, or even a 40% bonus on your Tiger Dollar purchase. Tiger Dollars are good on all TFNN newsletters, webinars, and trading services and never expire. For all the details and to get your Tiger Dollars before this sale ends Monday, July 6th, visit the front page of TFNN.com today.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So we're taking a look at Diamond Shipping out here. Did this used to be Diana Shipping? Was that this one or was that a different one, Brent? Do you remember?
There's still that company. This is a different company.
Oh, okay. So, it doesn't mean so. I'm searching for one of the bottoming patterns that I use out here. It doesn't mean that they're present at every bottom. So I'm not saying that this hasn't bottomed out here. And especially when you take a look at the candles that have formed over the last 4 days, you've got bullish candles. So this is at least telling us it's trying to bottom. I mean, you got a hammer candle out here on the June 26th, another bullish candle on the 29th. You've got right now a potential bullish piercing candle out here. So it's definitely trying to form some type of bottom, but you've got that bearish structured profile on the daily time frame out here, and price right now is trying to deal with Stevie's red line, so it's just above that level. So figure the red line's probably around 819, 820, something like that, or 817 it looks like. So if it can close above that, at least we should see a move to 866 to 910. Above 910, the resistance level would be $10.04 out here. So no matter what time frame I would go to, if I go to the weekly, there's no real bottoming signal. You'd have to get a lower low this week to get to, you'll get bar number 8 this week, but it won't be the lowest low. So maybe that's suggesting that there's a lower low coming the following week or the week after that, maybe to complete that daily A to B equals CD to the downside pattern out here. So that's all that I could come up with, Brent.
No, that's much appreciated. I just dipping my toe. I'm not like draining the bank account on this one or anything. I just figured I'd give it a shot and
Yeah, and, the instrument that we're in that we took the long on, it just hasn't responded the way that I would have liked to have seen it. It hasn't taken out the bottoming pattern yet, and it's moving a little bit higher. It was at least earlier. I don't have it up on my screen right now, but I've even been considering jettisoning that position just because it hasn't really worked that well out here. And so this is in the same category or general area.
It is, yeah. There's a bunch of them there's a lot in that same area. There's a bunch that drive bulk shippers. So there's a multitude of them. This one, at least fundamentally, looked pretty good. I mean, I don't do a lot of that, but sometimes I'll add that in the mix too. And it seemed to be, of all the different ones I looked at, was probably the strongest in that respect as far as debt and price to book, all those kind of things. So
right. Yeah,
anyways. Well, I wish you a great 4th, and
thank you.
Always appreciate your help. It's always a pleasure talking with you, and I just hopefully have a great day.
Thanks. We'll do. Thanks. Always good to speak with you as well, and happy 4th of July, and we'll talk to you next week, if not tomorrow. Have a great day, Brent. Let's go to our next caller. Our next caller, I believe we've got Steve. Steve in Maryland. Steve, thanks for calling. Thanks for holding. How are you today?
I'm good, Steve. So, I called about some cannabis stocks last time, and I'm doing one again. But I had a question for you. What's your understanding of comparative advantage?
Comparative advantage?
Yeah, your history. So
competitive advantage?
No, comparative advantage.
Comparative advantage. I'm not. You got me stumped out here.
Well, it basically means two heads are better than one. When two people are yoked together to pull something, you can pull a whole lot more. It's like two oxen can pull more than one oxen. If they're just individual oxen, each pulling something, you put two of them together, they can plow a bigger field than two of them individually done. So two heads are better than one. And let me tell you, I am so glad that you're the other head because I love your service. So,
thanks. Let's you and I. Steve, thank you for that. Now let's you and I go plow the fields of. How do you pronounce this? Is Afria? Afria?
I think it's Afria. Yeah.
Afria. Okay. And this is a medical marijuana stock.
Yeah.
Okay. And so are you're in a position in this right now, or you're looking to get in, or?
I took a position just this morning.
Okay. So
and I'm wondering where your lines are showing up at.
Sure. So the first piece of information, price has gotten back inside its bullish structured daily profile. And the range on that profile runs from 434 to 464. Now, on this chart here, what we don't know is prices. So price had closed below the bottom of this daily profile back on June 24th. And then the following day and the following day. And really, this is the first time back up in here. If this is only a counter trend rally, we don't know that just yet, but if this is only a counter trend rally and we were looking at this daily time frame chart, you and I would have selected 444 as the area for that rally to stop. So that's the first thing with regard to profiles. I'm not saying that it is. Now, resistance on the daily is at 464, and on the weekly is 475. And on the monthly is 559 out there. So those are your resistance levels from a profile perspective. It's a bullish structured profile on the daily. It's a bearish structured profile on the weekly, and it is a neutral profile on the monthly. So those are what those signals tell us. Let's go take a look at my other charts for other tools and other patterns. So we had said 444 would have been the potential counter trend rally. Now, again, counter trend rally simply because price had given us a change in trend signal by closing below the bottom of that bullish structured profile. It turns out that my green line, that oscillator and change line, is priced just slightly above that, so 449. So that counter trend move would have been 449 to 444 out there. So what you'd really like to see is some type of close above 449. Doesn't have to happen today out here, but certainly something you would be looking for. As I look to this chart to identify a top, this certainly had a sell the D point. Now, on this white background chart, I can't draw the A to B equals CD line here, but the A point was March 16th as the low, the B point April 15th, the retracement down to May 15th, and then it looks like it was a 1-to-1 or so as price got up into the highs on June 9th. Now, making that 1-to-1 or 1.272 price projection didn't necessarily mean that it was going to end there. It was the bearish dark cloud cover candle that formed on June 10th. Then price pulls back to support, tests it, rejects it, but then tests it and fails out there. And so that's the concern, is that Afria could be targeting 306, the level where it had broken out. We just really won't know until we see the test of Stevie's green line, that 449 area. So stay with the trade. The average true range on Afria on a daily basis over the last 10 days is 26 cents. So your stop should be some multiple of 26 cents, wherever below it maybe closes even today. If you want to take a tight stop or at least your entry point out there, that's what I would be looking at. If I look to the other time frame chart, so we're looking for some type of we're looking for what do the charts tell us out here, first of all. So on the weekly chart, you had a nice TD9 count bottom. And that TD9 count bottom, that formed out here. We can see the bar. I'll give you the actual date. That was the week of March the 20th out here. And from there, we would have said price should target its TD9 count breakdown level. Well, that was 517, Steve-O. And so it fulfilled that obligation. Price was rejected and it's pulled back, hasn't broken a level of support or anything. So look, we're about to go to a break. I want you to hold on through here so we can plow this field out here. We can also see resistance on the monthly chart, which is at 502. We'll be right back.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as,
whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that will take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
Bam!
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We're on the line with Steve Wood. Steve is the author of Float Analysis, and so he's the godfather of this. And I've got his float analysis tool up on my screen here, Steve-O, and what I can share with you here, looks like there's been a full turnover if you go back to the trading session of May the 6th out there. So we've got that highlighted box. And now I'm not familiar, folks. I'm not familiar enough with Steve's system. I'm not putting him on the spot or anything here. I just want to be able to provide that data to you, Steve. And so the bottom of that float analysis channel is 278. The top is 5 1/4, and your center line is 4 to 1, which price tested a couple of days ago out there. So that's all that I can find for you. But as you said, two heads are better than one. So what does all of this mean? What that I've shared with you? How will this impact anything that you're trading?
You notice the back of the box goes down to the bottom of the most recent rally, right? And if you look at the volume bars in that rally, they're pretty big in the background. And you also notice that the channel line is rising. So that means there was a float turnover at the bottom, and then there was a float turnover in the middle somewhere. Now it's forming another float turnover, and it's come right down to the bottom of that box, and it's about to move, and it's starting to move higher. And the reason for that would be because there's strong money that's holding the shares in the background of the current box, and so it's rising on that. Now I'm noticing too that kudos for you, because you talked about it hitting resistance, and it looks to me like it got right like a penny away from what you were talking about, and
yes,
has pulled back, just on a minute or 2 minute chart or something. So, but I think it's a really strong stock, and it also got listed on the NASDAQ. It came down, in a 50% retracement, and but it's got a bunch of overhead supply, so it doesn't mean it's going to race up there to the top. But it's also got big volume up at the top, so I think it's a good hold from here myself.
Okay, so and cool. So what you're going to want to really pay attention to, I would say, is this 450, 449, 464. If this can clear 464, then sailing should get a little bit smoother for you to the upside. But just a word of caution: it's a Gartley sell pattern that's in there. Hasn't been able to take out any key levels of resistance. That always concerns me. But it's just concerned. It's still a valid trade out there, and just keep the stop in place, and you should be in good shape. Okay.
Yep. One final thing. I love your webinar on stop losses and position sizing and positive. I mean that is just excellent, absolutely fantastic. Because I've created spreadsheets from it. I've watched it more than once.
Well, that's great. Well, I'm glad to hear that. Look, for all of us, and we all of us really enjoy or love this game here. And it's more than a game because, there's live money that is at play, and we all work very hard for our money. But the real key to this game, it's a numbers thing. And that's what position sizing is all about. And I promise folks that no matter how good or how much more you believe you want to be able to learn about technical analysis, that if you use position sizing, you will be able to stay in this game forever. And that's really what it's all about. The only time people get blown up is just when they're absolutely over leveraged out there, or continue to stay on the wrong side of the trade without stops. Obviously, I mean you can't do that out there. So Steve, thanks for those nice comments. I really appreciate it.
Can I make another one? Buy the D point and sell the D point. Yes. Oh, my gosh, what a concept. I don't know how you're doing this completely, and I'm still trying to figure that out because I have never done that. And I have to say, you are something. So,
well, anyway. Thank you for that. I appreciate that.
You probably have a lot of people saying that to you, but in any event, I felt like I needed to say it on the air.
Well, thank you. I appreciate that. I think I can find as many people on the other side of that argument too, but that's okay. Hey, That's the way it is out there. So, hey, Steve, thanks for your time. Have a great 4th of July,
and I'm going to send you some questions, and would love to chat. So, thank you.
Sounds great.
Bye-bye.
Sounds great. All righty. Let's go to Ruby has a question about the Russell 2000. Wants to take a look at the Russell 2000. So let's go do that out here. And as we take a look at it, here's what we know, Ruby. Let me just kind of expand the chart out. So when we expand this chart out here for the Russell for the September contract, what it did today is it's testing the top of a brand new daily profile. So this was formed yesterday. It's really a neutral profile. The center of this box, Ruby, is in the center really of the box. Now I say a box, we don't see a box. We see a top, a bottom, and a center line out there. So no real significance here with regard to that profile. You can also see a short-term descending trend line that has contained price, but we can also see rising trend lines out here. So we see the Get Smart cone of silence. It looks like that is forming out here. So nothing is broken down, although the Russell 2000, most certainly, just like the other indices, they do have valid topping patterns out here. If we take a look at the Russell 2000, just give me a moment to switch over to that area, daily indices, equity futures. Here we go. So we'll take a look at the Russell 2000. Then we'll take a quick peek at a short-term chart for you, just see what kind of signals, if anything, is being generated for. So here's the daily time frame. So we also know that, so here you can see the Gartley sell pattern. And you can also see, Ruby, that what all price has been doing, it keeps getting up to Stevie's green line, keeps getting deflected. Well, it's done that again today. So that is a cool resistance and a cool support line. Very helpful. Now, so you've got the sell signal in here, price just moving sideways. Maybe this is distribution at this stage here inside of the Russell 2000. We don't really know. What we do know is we pay attention to Stevie's green and red line out there. That'll assist us in identifying what the next move is. So right now, the next move, Ruby, is if price is unable to take that level out, well, then it will go explore to the downside. So the downside out here in the Russell could be anywhere from 1379 to 1409 out there. Now on the 30-minute time frame, so there'll be the one short-term time frame chart that we take a look and see if there's any intraday signals out here. And the answer is I don't have anything. So, it's the 4th of July. Most people have, already mentally checked out, so to speak. It's time. Not that we all need a vacation, but the reality is we probably all need a vacation out here. Don't know that we're going to get the kind of vacation that we want, but trading should be relatively light, so I wouldn't expect a whole heck of a lot over the next couple of days. As long as we are here, we did get the new profile confirmation in the ES, as well as the Russell 2000, and as well as the Dow equity future contract. The Dow was already hit and rejected, the top of that profile. That's 25,846. The NQ is above the top of its box, so the question is, will it take out its prior high? I don't know, which was a Rhodes momentum indicator signal top. And the ES Mini hasn't made its way up to the top. That would be about 31.29. It wouldn't be about, it would be 31.29 or 31.30 out there. So that's what's going on from a profile standpoint. VIX below the 50-day exponential moving average, which is priced at 32.94. This says that buyers should be able to push that ES Mini up to the top of that profile out there. If we take a look at market breadth for the S&P 500 positive for the 60, the 240, the daily, and the weekly. So market breadth positive. Spot volatility below the 50-day exponential moving average. Odds favor the ES Mini will at least attack the top of that profile. We'll be right back.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has just launched their July 4th Tiger Dollar sale. For 1 week only, we've doubled all the bonuses where you can now get up to a 20, 30, or even a 40% bonus on your Tiger Dollar purchase. Tiger Dollars are good on all TFNN newsletters, webinars, and trading services and never expire.
For all the details and to get your Tiger Dollars before this sale ends Monday, July 6th, visit the front page of TFNN.com today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So mixed bag out here. Dow is flat. The S&P up 16. NASDAQ 100 up 110 points out here. Let's go to, we got a couple of questions that are in by email. First one coming in here from John in Sarasota. John asked a simple question. Netflix, is it ever going south? Well, let's go take a look at Netflix. I think the answer there, John, is no, not ever again. It's just going to continue to move higher. Now, of course, I'm being facetious, but to a certain extent, not really. If we take a look at it, John, price is above the top of its bearish structure daily profile. That's what it's doing today. You know what Stevie likes to say, nothing more bullish than a failed bearish pattern. Now, I'm not saying that there was a topping pattern out there. We'll go take a look at that. But nonetheless, being able to overcome, I want you to think of if you're playing football, no idea if we're going to play football this year. I think we are, but who knows. But if you're playing football and you've just got simply the, the odds are against you being able to, get this fourth down play or whatever it is. Well, in this case here, yesterday was the fourth down play, was fourth and, whatever inches, and they went for it. Well, they didn't just get inches, they've gotten feet. They're at a new all-time high today. So price above the top of its daily, top of its weekly bearish structured profile, and above the top of its monthly bearish profile out here. So let's go take a look at the signals, though, see what it's doing. Is it possibly making a top out here for John in Sarasota? So we take a look at the daily activity out here as we look for signals. We don't have one. This is negating the Rhodes momentum indicator signal. The last signal here produced a short-term high, which was just nothing more than sending price down to test support. So that high came in on June 24th. That was with the bearish engulfing candle. It confirmed that pattern. Price made its way down to support. Support was the bottom of that daily profile at 438. It's held. There may be another Rhodes momentum indicator pattern that forms out here, John. That could form tomorrow, could be Monday, could be Tuesday, could, whenever it is. Again, should one of those patterns form, you've got to be able to identify support because that's where price will head to. We don't know whether price will break through support or not. So potential, is there a topping signal right now in the daily? No, there is not. If one does form, what are you going to watch? You're going to watch that 438 level on a weekly time frame. We've got price moving higher, doing less relative energy, but you need a bearish reversal signal. So that's something that I would be looking for out here. Until that happens, price wants to continue to move higher on a weekly basis. Do I have any kind of a topping pattern? I do not. There's A to B equals CD patterns out there, but they won't mean anything until we see a bearish reversal candle. That's how the market communicates to you and I, and especially is important when it's communicating to you and I at the end of a pattern out here. You've got a couple of these with patterns. You do not trade candlesticks on their own. You do not trade patterns on their own. Of course, you can do anything you want to do. I'm just suggesting that you take the decades worth of knowledge that I've been able to acquire out here and don't make those same mistakes. Go make some new ones. Right? It's always about mistakes out there. That's how we learn. That is how we learn, folks out there. That's why I do not stick my finger in a socket anymore, because you get electrocuted. Actually, I've never plugged it into a socket, but it sure felt like it the day that I did get electrocuted. Let's get back to the monthly chart out here for John in Sarasota. On a monthly basis, we are in wave number 7. That's letter G. This is going to be the month of July. Should be bar number 8 of its hitting 9 count. And so, this could be getting near a high out here over the course of the next month or so. I would keep an eye on the daily and then keep an eye on support. When you say south, John, you've got to see a key break of support. In this case here, 438.86. That would send things south down to the 361.71 level. That is what we're looking at for Netflix. The next question here coming in from Michael. Michael in Niagara Falls. And Michael wants to take a look at the downside target for VXX out here. So VXX is what? Michael likes playing with dynamite, I think. No. So this is the, what is the VXX? So this doesn't tell me. What is it, guys and gals in the den? Is this a 2-time, a 1-time, a 3-time? It looks like it just really is just following the VIX. Maybe it's just a 1-time out here. But Michael's question is, what's the downside target? Okay. So for the downside target, and it may be, this is a more complicated vehicle to trade, but for the downside target for VXX, we'd have to come up with a level of 2109. Now we don't have to, but Steve would come up with a level of 2109, and 2109 would be its last on a daily basis, last TD 9 count breakout level out here. And prices trading below Stevie's green line, it's actually red, tells us that the VXX has a falling price oscillator below 0, and prices below its at the bottom of its profile out there. So that would be the ultimate target. There's a prior low and a prior swing point out here, in like the level of where it formed a TD9 count. That was back, that's at a price point of 28.83. So you'd have to be watching that level. Let's see on the weekly time frame, what's the weekly tell us? So the weekly says, well, hold on, not so fast. The weekly bottom with a TD9 count out here. And the question is this just a retracement? Now, this is pulling back into, let me pull over the other, pulling back to the top of its profile. So if you were short, Mike, this would be the time that the sphincter muscle starts to get a little bit tight out here. And that is because prices pulled back to test what could be support, which is the top of a profile. Ordinarily, that's a resistance level. But in this case, as we take a look at the price action, and this profile on a weekly basis formed after its highs out there, and as we take a look at the price action pulling back in there, there was one day when price tried to close below it. That was on June 1st. That didn't last long. That's why Stevie always looked for 2 closes, because these one-hit wonders, they don't mean a thing, and you don't want to take any action that you don't necessarily need to. So when you say downside, right now you're going to be watching this 3302 level. And if you get 2 closes below that, then, Mike, you could do is we should go back to Stevie's daily price projection level on VXX, which would be $21.09. I hope that helps you out. Thanks so much for writing in, and enjoy the 4th of July holiday in Niagara Falls. Now, do they shoot off fireworks on the New York side out there? That would be interesting. That would probably be a pretty spectacular place to see the 4th of July fireworks. Let's go out to Jeff in New Jersey. Jeff, thanks for calling. Thanks for holding. How are you?
Doing well, Steve. How about you?
Very good, thanks.
Yeah, can you hear me?
I don't know if you guys can now hear me in the den. Did I get dropped for some reason? Everything still shows live, so I'll just keep talking. Yeah, you can hear me, but we've lost Jeff. So I know Jeff had some type of question about trading patterns, so he's there. So
yeah.
Jeff, can you hear?
Are you back, Steve?
Yes.
Oh, great. Okay, well, I know we're near the end, so I'll be fast. So before the COVID virus volatility hit the market, I had a particular pattern I was trading on the YM futures contract, and I had that pattern nailed. I had a super high accuracy rate, and I was so happy. Anyway, once the volatility hit, that pattern disappeared after a while and hasn't been back. And my question is, like, from your experience, do you think that pattern will reappear at some point, or should I totally just forget about it, abandon it, and look for something else?
We'll be right back and we'll try to discuss that in our last 2 minutes.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. We're going to finish off the today's session here with Jeff in New Jersey, who asked really a great question. If I paraphrase your question, Jeff, it's basically there's a pattern that you trade. It has worked very successfully for you. It has since not worked so well, just as of recent. And your question is, do you stick with it or something like that? And so it sounds to me like I really think that each of us, you and I, everybody else out there, there's really three modes we have when we're trying to learn something out there. We either are, so maybe this doesn't apply to you, but also I'll just speak about it for myself. Those three modes are either a dabbler, a stressor, or a master. And what I mean by that is a dabbler, usually they see something, they decide to get in it, but when they run into obstacles, they're very easily swayed away. It's like, everybody else's business looks easier than it is. Or somebody makes golf looking easy out there. Then there's the stressor. That's the next level up. They anticipate there's going to be some kind of problem. They get through that first problem and they make it through. But then the next problem, they just stress out about it instead of realizing that you're always going to run into problems that you have to figure out and resolve out there. And then there's the master. The master, and that's what I believe that you are, Jeff, that you've mastered a pattern that is out there. And so you should expect to find instances when these patterns don't work. You can ask every pro golfer, you can ask every pro trader, you can ask every pro in everything that they do. There are periods of time where the patterns or things that they were using didn't work. That is usually when you find the best, because you take what you had and you build upon it and you go find some other tool, some other technique to really add to that. That's how I found my perigee and apogee. That's how I found and developed the Rhodes Momentum Indicator. I was looking for something else, and instead something else was right in front of me. So I'm going to suggest that you stick with it. Maybe take a look at a couple other tools. Maybe it's a TD9 count. Maybe it's just Stevie's green line that's out there. But, Jeff, stick with it. Patterns fail. We can also learn from patterns that fail, too. That's why there's both sides of the trade. Does that help?
Yeah, I'm sorry we're out of time. I would follow up a little bit, but I appreciate your help.
Let's do that tomorrow. Call me back tomorrow or on Monday, all right?
Okay, thanks.
Hey, folks, have a wonderful Wednesday, and stay tuned for 2 more great hours. Take care, folks.